Tesla just launched the next generation megapack controls platform and slammed the competitors in the process. Dan Ives was also just on TV, and he said Tesla will cut prices further. We'll talk about that as well. But first, let's go through this one. It's a fun one. The whole electric story is based on this Tesla engineer, Chris Bauman. He posted this post on LinkedIn earlier. Chris is a senior staff product manager at Tesla in charge of software and firmware for battery energy storage platforms. He said this on LinkedIn. Our next generation Megapack controls platform, combined with our industry-leading controller hardware in the loop test services, our CHIL platform, speeds up and de-risks deployment of gigawatt-scale battery and hybrid renewable plants. This matters. Sounds like Stephen Mark Ryan talking, doesn't it? And maybe he watches Stephen's videos. I wouldn't be too surprised. This matters because time and time again, our competitors fail on control system commissioning, causing multi-dollar losses and 3 to 4 month project delays. In short, the Tesla engineer claims that the platform enables quicker and smoother deployment and commissioning, which is important since those large-scale projects are often worth north of $100 million, and delaying turning on the batteries can result in critical losses. Bauman continues with even harsher comments on Tesla's energy storage competitors, claiming that the companies are deploying untested controls. It does get interesting here. Unlike our competitors who deploy bespoke and untested RTAC controls, and bespoke really in this context means it's duct taped. They fixed it up with duct tape basically last minute because, they're trying to still figure it out. Tesla's innovative control system engineers productized regionally specific control templates, for example, North America, Australia, etc., that are CHIL tested and approved. Our approach provides EPCs with turnkey control solutions that work the first time and meet the needs driven by electrical topology of large plants, the interconnection type, and regulations. I certainly enjoy seeing Tesla employees being a little bit more aggressive here and calling out the competition. While Tesla does produce a chill platform for the customers, I don't think Tesla employees are just chilling, doing nothing. I think they are working hard. And now let's see what Dan Ives said on TV. The conversation started about the megapacks, and then Dan said that he expects more price cuts for Tesla vehicles.
And why specifically Shanghai, do you think?
Well, I mean, the hearts and lungs of Tesla are in China. And regardless of all the talk out there, I mean, they're doubling down on China in terms of this battery factory. And you look at what they've done in terms of just manufacturing. I mean, China, not just from a supply, but demand perspective, that continues to be one of the key ingredients for success. I think that was almost a flex the muscles moment in terms of what you saw here.
Look at Tesla's market share grow in China. Tesla is obliterating the competition, even though Tesla has not had a new model for quite a while now. And Tesla is outselling all other competitors by an embarrassing margin. Tesla is not just flexing its muscles, Tesla is using these muscles to annihilate the competition, specifically the gas-powered vehicles, as well as the BYD Seal EV, which lost more than half of its sales compared to before. Look at these sales drop.
So I think it makes sense for them to build these battery packs in China where the materials are, the expertise is, you can build them cheaply. Do you think Tesla can kind of shake off the governmental sort of overreach there? Can they kind of, have them ignore that and still kind of perform there? Or is it going to be a overhang for the company as Washington kind of gears up against China?
Sure, it's great. I mean, with Big Brother watching in Beijing, I mean, look, that's the tightrope that both Musk as well as Cook walk in terms of what we've seen. I mean, that's where production for iPhone as well as a lot of the Model 3 and Model Ys are. Look, I think ultimately, they'll start to build out in the U.S., but I think this is a signal, and I expect Musk to also be spending some more time in China. That's one of their core advantages in terms of what you see with the Gigafactory there. And you look at batteries, I mean, that is really going to be the sort of the golden goose in terms of going forward.
Looking at this chart from Rob Mauer, we can calculate how much of Tesla's production happens within China. I'll take data from Q4 of last year since this last quarter's data is not fully available yet. Tesla in China produced 235,000 vehicles in Q4. Tesla produced almost 440,000 in that quarter. So production in China in Q4 accounted for 53.5% of Tesla's total global production. But in Q4, Tesla delivered only 122,000 vehicles within China. All of the other vehicles were exported to, for example, Europe and other countries. And in Q4, China only accounted for 30% of Tesla's total global deliveries. So when you see a Tesla bear complain about, oh, Tesla is so reliant on China for now in terms of production, yeah, but in terms of deliveries, not really. I mean, it's important, but US actually is definitely more important because there are more deliveries there.
Dan, you mentioned maybe we could see more plants, more factories here within the U.S. Musk has a goal of 20 million vehicles to be produced by the year 2030. If that goal is going to be achieved, how many plants do you think could potentially be necessary?
Look, I think it's first thing first, right? Making sure they don't trip over their shoelace. I mean, especially right now, they're cutting prices. Demand's been strong, but I mean, that's a balance, especially with the price war in China. But you see in terms of in terms of Mexico, I think Indonesia is next. You're going to continue to see more and more factories out there, but that's going to require CapEx. And I think it's also important right now that if you look at what's happening in Europe, you look at Austin, I think those are the keys in terms of Berlin as well as Austin, ramping those. And of course, in longer term, there's going to be a lot more things behind that.
We have been hearing about Tesla trying to open some sort of a facility, maybe a factory in Indonesia for quite a while now. And a year ago, an Indonesian official said that, God willing, Tesla may open something before the end of the year. Well, the year ended and there's still nothing. Although we have this happening, Indonesia is about to propose a limited free trade deal with the US on critical minerals, meaning if you get the minerals from Indonesia, your vehicles would still qualify for the $7,500 EV tax credits, which of course is absolutely crucial. So if that works out, maybe Tesla will seriously consider Indonesia then.
Do you think Canada is the most likely destination, given the IRA sort of influence there?
I think it checks every box. And I think when you look at Canada, you look at Indonesia, those are the ones that make the most sense. And then of course they'll continue to expand. I think for right now, I think you take a step back, it is really the scale and scope. I mean, you look at a lot of the other, whether it's Lucid, whether it's some of the 313 area code, GM, Ford, a lot easier said than done. I think right now, that's why they're trying to put an iron fence around their backyard.
What about Mexico, the new plant that they announced there that is located there? How critical is that just in terms of Tesla diversifying its supply chain and really getting ahead of any potential types of issues?
Well, also it's about a sub $30,000 car. I mean, you're not getting a sub $30K car if that's being built in Europe or Austin. And I think it's sort of carrot and the stick. That's what everyone's waiting for here. But because to get to, as you talk about, some of the longer term goals, you need to be mass market, you need to be sub 30,000. But then I think the big debate going into next week is margins. Like, what do margins look like? We believe at least this quarter they'll be able to sort of toe the line in the sand. But if you continue to get significant price cuts, look, that's the work. Look, I think we're going to get more price cuts. I think they're containable. But I think, especially in China, that's really right now the biggest variable. They've been able to navigate, I think, extremely well. That's why the stock's done what it's done. But I think that continues to really be navigating this next step is what investors are focused on.
To many, I think it was quite a surprise to see Tesla's deliveries in the US stay flat quarter over quarter. This is Q1 and this is Q4. But in China, actually, we crushed it. This is an ideal case scenario because in the US, there are so many things that we can still do. We have a huge, gigantic EV tax credit, but China is a little bit more difficult. So things in China are actually looking really good.
So do you think these sort of 5 price cuts this year, Elon, is that really indicative of a demand problem, or is it more about them sort of going after competition like GM and Ford and just sort of growing the market share?
Look, I think it's a softer macro, and I think we saw that last year. So you got to just read the room, rip the Band-Aid off, and that's what they've done. So I think the first step has been what I view as just a massive poker move that's paid off. But it's competition. Whether it's 313 Eric, whether it's Europe, you got Lucid, you got everyone coming. They can't just sit there high in their chair and not cutting prices. And I think that's essentially what's happening now. But because of the margins, they have that flexibility. Look, the haters are going to continue to hate on Tesla no matter what they do. So far this year, it's been a massive bet. Next week's important just in terms of that margin story. That's really going to be the front and center.
Even if the numbers don't look great, look at this right here. Lithium prices, which are crucially important for EV batteries, and that is a big part of the whole cost. It's dropping so much that Sawyer is reporting on the drop today. For one moment, it appeared that it did not drop around here. As you can see, it stayed flat around here. But the reason why Sawyer is reporting on this is because now it is continuing to drop. And this is an important message to all Tesla stock investors. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.